Have you ever earned interest from a bank, dividends from shares, or received payments with tax already deducted? You might be wondering, do I still include this income when filing my tax return? Today, we will break it down step by step. What is final tax and what is not final, and exactly how you file correctly so you don't pay tax twice. Just because withholding tax has been deducted doesn't automatically determine what you put on your tax return. The deciding factor is whether the tax is final or not final. We'll go through both with examples so you can clearly understand what to do. So what is final tax? Final withholding tax means the tax has been completely settled. Once tax is deducted, no more tax is calculated on that income. Common examples include bank interest, dividends from shares, prize winnings from lotteries, and some government bonds and investment incomes. For instance, if an investment or bank account pays interest and tax is deducted, this is usually final tax, meaning you do not add this income to taxable income again when filing your tax return. And what is considered as not final? Not final withholding tax is different. Here, the tax deducted is only a partial payment or an advance payment. You still need to declare the full income and calculate the tax as usual. The withholding tax already deducted is then used as a credit to reduce your total tax payable. Common examples include consultancy or professional fees, freelance or a service income, rental income, and commission income. For example, if a client deducts tax from your freelance payment, this is not final. So you must include the full income in your tax return and claim the withholding tax as a credit. So let me give you a practical example of a final tax. Suppose you earn interest from a bank or investment, and then a withholding tax is deducted from that income before you get that income into your bank account. Because this tax is final, the interest income is not included in taxable income. You do not pay extra tax on it. In most cases, nothing further is required from you. An example of a situation that is not final tax. Suppose you provide a service and your client deducts a withholding tax, most probably 5%. Here, the tax is not final. This means you still include the full income in your return. And then you will use the withholding tax as a credit to reduce your total tax payable. Remember, not final means the tax is only an advance. You calculate your full tax liability. So I'll go ahead and give you the processes on how you can file your returns for both cases. So for not final withholding tax, here is a simple process. You include the full income in the appropriate section as given in the KRA Excel sheet. So enter the withholding tax already deducted as a credit, and then the system will subtract this credit from your total tax due, so you are not taxed twice. If you want a full step-by-step guide on how to file this return, I've already done a detailed video on this process. I will drop a link in the comment section for easy access. Now here is what to do or how to file when you have final withholding tax income. If you have other incomes besides your final withholding tax income, for example, you have salary, business or rental income, file your total income without including the income on which final withholding tax was already deducted. For example, you earned a salary or a business of 500,000 and then you had an interest of 50,000 which was already deducted tax. So on your final filing, only include the 500,000 from your business or from your salary when filing your returns. Don't include the interest income. Number 2, if your only income is the final withholding tax income, for example, bank interest or dividends, you don't have any other income, you simply file a nil return because the income was final or the tax deducted was final. This way, you remain compliant and avoid reporting income that has already been fully taxed. So to summarize everything, final withholding tax is income is not included in taxable income. And for not final withholding tax, income is included, tax is calculated, and withholding tax is used as a credit. Think of it as final is equals to tax already done. Not final, partial tax, still need to report your full income. So my final takeaway, withholding tax does not automatically remove income from your return. It only determines whether you are taxed again or not. For bank and investment interest, dividends and other final incomes, the tax is complete. For professional services, freelance work, rentals, commissions, and other not final taxes, you always include the full income and adjust with the withholding tax as a credit. Understand which income is final and which is not, and your filing will be smooth and correct. So I hope this video has helped you understand withholding tax and how it affects your tax returns. If you ever need professional guidance to file your returns or determine your tax obligations, you can reach us via the WhatsApp number below. Don't forget to subscribe, like, and share this video so we can help more people who need this information. Thank you for watching, and I will see you in my next episode.